Us through what's happening on this Blue Monday on Dalal Street. Let's take this conversation forward. I understand that Mayuresh Joshi, his fund manager, Angel Broking, is joining us. Mayuresh, wonderful to have you on air with us this afternoon. Give me a sense as to how you're looking at what we are terming as pressure in the markets. There's been a lot of chat in terms of what is actually happening, there's certain stocks, of course, that have been holding up the markets, and then there seems to be the market cap that's also shrinking on the other side. How are you looking at this market right now, as well as the opportunities for people to go in on dips?
So afternoon, Fatima. It's a pleasure to be on your show as well. A large element in terms of what has transpired in the markets over the last few weeks. A few of the frontline stocks have been doing the weightlifting for the markets, but the broader markets are still feeling the pain in terms of what has probably transpired, both in terms of the churn that we probably witnessed from a mutual fund portfolio perspective, even the redemptions that you probably had witnessed on the PMS front, or the ASM margin requirements, coupled with the fact the auditor resignations for a few of these mid-cap companies did not help sentiments. So a large element in terms of a few of the large cap stocks actually driving the indices to higher levels. I think that seems to be the story as far as the Indian markets are concerned. The headwinds still persist. So what you're probably seeing in terms of the trade war tantrums and what can actually happen in terms of the absolute implications in terms of the GDP on a global scale, or what probably happens in terms of trade deficits, I think that can get played out over the next few weeks or quarters, and that can have a dampening effect, which creates a huge overhang for not just the Indian equity markets, but global markets at large. The second element in terms of crude, and though crude prices have cooled off, the depreciation of the rupee probably creates double headwinds in terms of both the fisc and the current account situation in India, and the trade deficit probably not helping. Couple that up with what you probably witnessed in terms of inflation numbers, though on the base that we are talking about on a YoY comparison, actually staying elevated, and the IIP numbers actually becoming soft. The RBI stance, along with the central government stance across the globe, including the Federal Reserve, expected to rise rates. I think that is going to be an impending kind of risk for equity markets globally as well as India. So large element again, as I see, I think earnings is something that should provide the much needed respite and momentum for the markets, but the earnings also have not come through. So it's a hope that we're probably expecting that earnings recover, not just for this quarter, but hold up for this year, probably in double digits of 14-15 odd %, which can lend support in terms of premium valuations that we derive. So I think the bottom line here, Fatima, is that we probably need to have a stock-specific approach in these markets, have a bottom-up approach, and probably stick with quality, because I think that's the best way to approach these markets.
Yeah, something that you've held on to for a while, Mayuresh. The headwinds are many. You've spoken about the trade deficit, the rupee depreciation, inflation. IIP has really weakened, and we're looking at what earnings can do for us as well, which, by what you're saying right now, doesn't look as promising as expectations were, but we've got some way to go on that front. But look at Tata Motors and what's happening on that particular counter. There's clearly more trouble there. Moody's has cut the rating on Tata Motors, and this is on the back of credit weakness that they're seeing. Meanwhile, the company is planning to raise 2,500 crore rupees through NCDs. Let's find out what the potential impact of this move could be for Tata Motors. Hiral has the lowdown on that. Hiral, do walk us through the implications for Tata Motors, even as Moody has come down with a downgrade for this counter.
That's right. So overall, number one, with regards to where the fundraising plans are concerned, they're looking to raise around 2,500 crores via NCDs, and this is expected to be done in FY19. Now, this is mainly to finance repayment of certain NCDs as well as term loans from banks for meeting the ongoing capex as well as general corporate purpose. In August 2017, back then, the company received approval to borrow around 3,000 crores via NCDs, and out of which they borrowed only 1,500 crores by way of unsecured NCDs, and this was done till May 2018. Now, the borrowing of the company as on the 31st of March 2018 stands at around 17,494 crores, and this is on a standalone basis, whereas the outstanding NCDs aggregate to around 8,097 crores. Now, with all of this said and done, you have Moody's, which has gone ahead and cut the company's ratings with regards to credit weakness. They've downgraded the corporate family rating and senior unsecured instruments rating by a notch. They've downgraded from a BA1 to BA2 on expectation of continued weakness in terms of a consolidated credit matrix is concerned, and this is for this next 2 years. Now, the rating outlook, however, remains stable. Now, what they are saying is that given JLR's large contribution, weakness in JLR could have a direct impact on the financials, because JLR contributes almost 78% to the total revenues, and 76% is the kind of contribution that we see at the EBITDA level. And company's adjusted consolidated debt to EBITDA is likely to remain elevated for the next 12 to 18 months. The large capex plans also are expected to keep the free cash flows negative, and rising commodity prices as well as rising challenges at JLR are expected to keep the EBITDA margins below 3%. Now, post that, in terms of the annual report as well, you have Chandrasekaran, who said and written a letter as well stating that Tata Motors and JLR both need to be more agile as well as future ready. And why future ready? Is to meet the ongoing disruption that could happen, to address the kind of headwinds that are pretty much ahead of us. Now, he's clearly indicating that the market dynamics are really diverse with regards to where JLR is concerned, because there is market cyclicality, there is muted near-term growth as well in the US, and uncertainties in terms of UK as well as Europe on the back of Brexit is something which we are watching out for. And very lastly, the taxation on diesel cars is something also that could impact Tata Motors. So to address these headwinds, what he's saying is that the company will need to focus on optimization, drive operating leverage, and manage the capital spends prudently, and hence JLR and Tata Motors need to be more agile as well as future ready to meet all of these headwinds.
So there are headwinds, but agility is what is required. That's the word that's coming in from the management. Hiral, many thanks for walking us through that, and potentially what the NCDs and the infusion of fresh funds could actually mean for Tata Motors. On the back of potential credit weakness, Moody's has downgraded the stock, which is why we're seeing that deep cut come in over there on the particular counter. Mayuresh, you've been upbeat on the auto sector. Now with what we're hearing from Moody's, the potential credit weakness, does that worry you at all? How has your outlook changed over a period of time for Tata Motors, and what it could bring to the table for investors?
Afternoon, Vikram. I think a large element in terms of the decline in the stock price has probably come in terms of their announcement of the huge capex cycle. The second element in terms of front-loading this capex cycle and then the back-ended revenues coming through over the next 2 to 3 years has clearly what has spooked the stock, both in terms of elevated interest and depreciation expenses recorded to be recorded in the P&L. The second element in terms of the overall demand outlook, and as Hiral was pointing out, I think these headwinds probably will still play out for TAMO as a stock. So I think what happens in terms of the uncertainty related to the trade tariffs for the North American markets is something to be looked out and watched out for. The UK uncertainty over a hard landing of Brexit is something that can impact UK sales significantly for Tata Motors. And the third element in terms of the Chinese JV actually holding up, both in terms of volumes and realizations, is the only piece that is probably doing well. Again, I think the kind of element that we are probably talking about in terms of comparative valuations for JLR with its peers, whether that's an Audi or a BMW, I think the valuations probably still remain on the higher side. And at the same time, I think we're probably looking at volume growth by these two majors. I think it's still holding up compared to what we really expect out of JLR in terms of either new platforms or launches that can drive the earnings trajectory going forward. So again, I think the net debt to EBITDA expected to shoot up very strongly, probably looking at constrained cash flows, and the same is getting reflected onto the stock price at this point of time. So yes, I think I remain constructive on the auto industry, but I was very, very selective. So I think Maruti, though I think has moved up significantly, we still believe the volume growth should be quite substantial, and as the Gujarat plant specifically ramps up, I think the fixed cost absorption can be quite substantial to drive both the operating leverage that one looks at along with the earnings that the company can actually deliver over the next 1 to 2 years. So again, I think within the auto pack, four-wheelers, I think Maruti probably still remains top of our stack.
All right, Mayuresh, I'm going to ask you to hold on to those thoughts because I want to just move over and focus on what's happening with the PC jewelers. Look at the...
Mayuresh, such a pleasure talking to you and getting your perspective on PC jeweler as well. But before we let you go, just want to get your understanding of what this stock can essentially do now. As far as jewelry stocks are concerned, how do you think they're going to pan out considering the way gold prices also have been moving? I guess all of it needs to be put into focus to understand for investors having exposure to jewelry stocks, how they're likely to react.
No, so Vikram, I think all these stocks that you're probably talking about, or a majority of them, had issues of their own, and these issues are still going to persist on their balance sheet for a length of time. Again, I think all these issues surrounding what can probably go wrong with the company financials have been exhibited in terms of auditor resignations or corporate governance standards actually not getting met. So I think the quality that probably one needs to adhere to in terms of stock picking, I think it's not necessary and mandated that you should be having an exposure to each and every sector that the Indian markets operate out of. Stock picking, I think it's not necessary and mandated that you should be having an exposure to each and every sector that the Indian markets operate out of. I think, but within the space itself, I think Titan is one company where all these issues probably are not there at this point of time and should not be there going forward as well. Very strong corporate governance, what you probably saw in terms of the warning guidance that has come through in terms of their jewelry sales, including the studded jewelry. I think a large element in terms of normalization over the next few quarters is a given. You're probably talking about a reasonable amount of top-line growth, actually creating a huge impetus in terms of their earnings momentum going forward. And though, as I said, Q1 might be a blip, I think the other parameters are probably holding up compared to the other stocks within the space itself. So again, I think stick with quality, go for quality. I think the four basic pillars in terms of good management, good corporate governance, solid earnings story in terms of in spite of any cyclicality factors that we might witness, and valuations which are not too expensive compared to the mean. I think if you follow these four factors on a historical basis and with the assumption that these factors should play out over the longer period as well, I think these companies should hold out, in my opinion, Vikram, over a longer period of time.
All right, Mayuresh, always a pleasure having you right here on Lunch Money. Thank you for that conversation. That was Mayuresh Joshi really giving us a sense as to how we should be navigating these markets at this juncture. Let's talk to you about the LIC board meet that is underway and